News out of Intel is getting pretty exciting. You have Qualcomm that is rumored in the last few days, broken by Wall Street Journal, that they've approached Intel as a friendly takeover offer to acquire Intel. Unclear if it would be the whole thing or breaking up the business. This follows dismal quarterly results. I previously did a video on it. Billion-dollar losses, laying off thousands of employees. They paused their dividend. You have leadership and directors resigning. It is not looking good out of Intel. And then more recently, just earlier this month, Intel's manufacturing operations, so think their foundry business, will become an independent subsidiary. This will help secure financing separately. This will address independence concerns and align more with being a contract chip maker. Keep in mind, when you are a foundry business and you're working with third parties that design the chips, you want to say, wait a second, you own both the foundry and you design chips. So are our designing business directly competing with each other? Then why would I give you business to make the chips when I can go to Taiwan Semiconductor and they don't compete with me? So you have that development, and it's unclear whether or not, this separate segment, the foundry business, will be, fully split off, or what will really happen from here. But it does make sense for an investor like Qualcomm to start thinking about it, because Qualcomm has broadly two core segments. They have their chip designing segment, which is growing nicely, very profitable. This is, led by their Snapdragon series, as well as a licensing business where they're getting a nice royalty on, effectively looking at different types of internet connectivity, talking about 3G, 4G, 5G type of developments. And this is, not growing as significantly, but still very, very profitable, very, like 70% profit margins for the licensing business. Looking at the revenues from their chip business, you see it's more concentrated with handsets. Think mobile phones. Automotive is a smaller piece, as well as Internet of Things. This is quite different from Intel, where their chip business, their chip design business, think is more personal computers and servers. So this would be a nice diversifying, aspect. And Qualcomm, what they bring to the table is not only profitability, what contrasts to Intel, which has seen significant losses, but just significant free cash flow. I mean, you can see how Qualcomm has been returning billions of dollars to shareholders, whether or not it's through repurchases or dividends. So if Qualcomm could see a deal that could make it work, then you could say, oh, well, that could be much more compelling than, let's say, just returning billions of dollars via dividends. As always, if you enjoy educational investment videos, you're watching Unrivaled Investing. My name is Daniel. If you enjoy this type of content, please make a point of hitting that thumbs up, hit that subscribe button. So let's dive further to go over the latest news with Intel. What are my thoughts around these developments? First, I asked AI Ticker Chat, are there any potential merits? Because no official deal has been announced between Qualcomm and Intel at the time of this video publication. And, asking AI Ticker Chat by the way, chat is now completely free to use that AI Ticker Chat, so you can ask these types of questions and more. And it makes a very reasonable, reasonable takeaway, which is that merging Intel and Qualcomm, even though it's unclear whether or not it'd be the entirety of Intel or just pieces of it, could create a diversified revenue stream, because you have the personal PCs of Intel, as well as the chip business, the mobile chip business of Qualcomm, and then the Internet of Things. And this combined, strength might make that easier to compete against the big players, some of their other competitors that have clearly been taking market share. However, there are concerns about, whether or not you'll have a good cultural fit, and possibly antitrust concerns. Personally, when I think about the antitrust, I'm less worried about it because, you're talking about mobile chips versus, computer chips, desktop and server chips. So I'm less concerned about that. Maybe Intel would need to divest their Mobileye stake, MBLY, where they have effectively controlling voting power of this business. Mobileye is one of the leaders in the advanced driver assistance systems, given that Qualcomm's automotive chip segment is growing nicely. So maybe they would have to split that off. Unsure though. It's important to recognize this is a very, very dynamic setup. And I'll talk more about that in a minute in this video. But there's a lot of moving pieces here. And, it's also interesting. Not only is Qualcomm looking at potentially a friendly takeover, you're also looking at Apollo looking around saying, hey, maybe we could put in a couple $1 billion for some sort of equity type of deal. This is interesting because Apollo previously led an $11 billion investment to acquire a 49% stake in one of Intel's Ireland fabs. So Apollo is making a bet on Intel's ability to create cutting edge semiconductors, to get into the actual manufacturing, not just the design. And the design is more of where Qualcomm is. And this is not Apollo's first rodeo in the space either. In addition to the Ireland bet, where they previously led in a $900 million investment in memory manufacturer Western Digital. Since then, Western Digital stock is up over 50%. And tangentially related, not directly related in the chip space, you see Apollo previously led a restructuring for Carvana, which is about effectively making it much easier to buy used cars online. And, they're hoping to disrupt the traditional dealer model for cars. And subsequently, Carvana stock is up several 100%. So Apollo can be very shrewd. This might be, if they see something, they might see some real value here. So the question is, what happens to Intel from here if you have shrewd investors like Apollo and you have Qualcomm, which is generating billions of dollars in free cash flow, saying, hey, we might be looking to partner with you or take you over? What are my thoughts on Intel? First of all, this is not financial advice. Also, quick plug, recently a premium member of the exclusive Unrivaled Investing community shared, this is a direct quote, currently the profit I have made thanks to called out ideas from Daniel can pay for 30 years of subscription, but the most valuable part has been the learning experience. I've been a very satisfied member since June 2022. Since then, I've never doubted to renew. If you're looking for compelling ideas, come check out Unrivaled Investing. By the way, prices will be going up soon, especially for the premium tier. So as I think about Intel, reading Chip War, fantastic book. I can't recommend it enough. You can see I keep a copy over my shoulder. Largely reading Chip War helped dissuade me from considering investments in this space. That's the first thing. The second thing is thinking about Chip War, and having a multi-decade perspective on the competitive environment, it is just very clear to me that Intel in its current form is unlikely to last. I do not expect Intel to keep having a foundry business, the chip design business, to have all these pieces under one roof, especially as they have sizable losses. So I look at Chip War, I look at the wheeling and dealing, I look at how it's just completely cutthroat. It wouldn't surprise me if you see it broken up into various different pieces. Maybe Qualcomm gets the design business, maybe Apollo makes a bid for the foundry business, and that, maybe you have some Mobileye get spun off, because you can't have Qualcomm getting it. So there's a lot of different ways to do this. Maybe, you have this foundry business, but it gets orders from the design business plus Qualcomm, to help ensure that the foundry has stable footing. So there's a lot of different ways to think about this. I just don't think Intel in its current form will be around, let's say 5 years from now. I think you'll see dramatic changes. When we look at Intel now, even after its dramatic drop over the last few years, it's still around $100 billion company. It has rallied a little bit since then, but $100 billion versus the book value of around $120 billion does reflect that investors say, hey, this should have a discount because we don't really trust the earnings power of this business. That's a key aspect. Now, I personally look at book value and say it's important to recognize, look, this book value has roughly $30 billion plus in intangibles. So if you're going to say Wall Street's effectively saying, yeah, this balance sheet, it's not even worth those intangibles, not really sure you're actually going to monetize it. But you are starting to see some really shrewd investors say, hey, we actually do think there's a lot of value here. And keep in mind, this is Qualcomm's specialty. One of their core segments is licensing. So they might be looking at the IP thinking, hey, maybe we can get some nice royalties from this. So, Wall Street saying discount. Some shrewd investors are starting to step up saying, hey, this discount might be, very compelling. And the case can be made that if the design segments for their computing, their data center and AI business, those chips, the fabless chip business, if it can restore its glory, get back to $20 billion in earnings power, then you could say, yeah, this might be quite compelling because $20 billion in historic earnings power for these businesses, it's nowhere near that now. It's completely collapsed in this business, particularly in their data center segment where, the customers, the hyperscalers are preferring the GPUs versus the CPUs that Intel's making, from NVIDIA, the GPUs. And so looking at that, you would need to get to some form of glory or former glory. And if you could, not even saying you make new highs, if you could just get back to where you were previously, get that $20 billion in earnings power relative to $100 billion, you might say, hey, 5 times, that could be quite cheap, especially if Wall Street sentiment changes. Maybe it goes to 10 times. Maybe it goes to, because, 100 billion divided by 20, 5. And so maybe you can get to, 10 times or 15 times in the future. And so that would require a significant turnaround. But look, Apollo is in the game, has done several turnaround bets before that have worked out. They've also, these financials don't even include really their foundry bets, which are, significantly unprofitable now, billions of dollars in losses. And so maybe you could have Qualcomm, say, hey, we will do the chips for the computers and the data centers, but we're not going to manufacture them. Then you have a foundry, and Apollo is clearly saying, hey, we think Apollo foundries can be worth something. And so foundries can actually start, being competitive. Incredibly, once again, reading Chip War, oh my goodness, one of the most competitive, toughest industries. That is the type of industry where you are racing on a treadmill. I mean, at the end of the day, your heart is pounding, but you might not go anywhere. Because it's such a competitive and tough business where you're constantly saying, hey, in a year from now, the product that we're capable of manufacturing needs to be X better. It needs to be able to process X faster and, better energy better energy management efficiency. So I would say this is a speculative turnaround type of situation. Too hard for me personally. Would not surprise me because my personal journey is I like rinse and repeat. I like the rinse and repeat in the shower where I, hey, apply that Head and Shoulders. It's the same thing every day. Sometimes I don't, but the point is that you're looking at businesses where it's like, oh, they've already proven themselves over the last 5 years, 10 years. Can they do it again for the next 5 to 10 years? And could I get, a nice return from that? So for me, that's how I try to structure my portfolio, lining myself with founders that have either proven themselves before with a successful exit, or founders that, have the track record to say, hey, I've done this for the last 20 years. I'm really excited for the next 20 and I just bought some stock. That's the type of situation that I like. This type of situation is a turnaround, highly speculative, but based on some of the math that I just shared, getting the $20 billion in historic profitability from their core legacy businesses. Could you get to that? If they could, then you're talking about potentially a lot of upside from here. And then, by the way, that doesn't even factor in foundry, which is super duper hard. But Apollo's clearly willing to put billions of dollars on the line to say, hey, we think foundry, look, the national security interests clearly are there. We don't want all of our chips, this to be a choke point, stuck in Taiwan. We would like to have our own manufacturing. And so we need to make sure the Arizona facilities and other, production foundries can get to scale in geographies where you're, let's say, less risk of an embargo or an invasion. And so these are the dynamics to consider. Too hard for my personal journey. Would not surprise me at all if it works out. I'd absolutely love to hear your comments below. Thanks so much for tuning in to Unrivaled Investing.